Now focus on clothing retailer Mr Price, and the full year headline earnings per share jumped 51% to 418 cents as the company kept a lid on costs. Revenue was up 13% to 10.9 billion rand. One of the most loved companies at this point within the retail space. That's if you got in there on time. Claude, delving into the retail space, and Mr Price, interesting because it's got that cash scenario that is playing out and on cash basis, and it's got those cheap offerings to the consumer, and this is what's putting them ahead.
Yeah, I mean, you know, for me, the way I look at Mr Price in terms of a play, during the recession, it's fantastic because people are short of money, they've still got to put clothes on their backs, and during the downturns, people will just buy down. So their business is strong and robust through this. The one thing that we've got to remember is that when things turn up again, you know, and the economy's going better, you've got a new group of people that, you know, are coming up and able to shop at those stores, and it actually becomes a bit of an aspirational purchase for people and gets them in there. So I think their business model is going to go, you know, it's going to be fantastic through the recession and, you know, even afterwards. I think it's great. I like what they do. I like what they do a lot. And I love the cash aspect of their business. I mean, if you look at, I mean, about 88% of their business is cash. I mean, that's fantastic.
It's quite fascinating that you're focusing on the fact that when the economy turns around, that we could actually see Mr Price losing a bit of market share. Some would argue with that, saying, well, it's got that competitive element, it's got a stronger rand playing towards its profitability as well. Of course, we know that it imports all of its products, essentially.
Look, you know, I'm not saying they're going to lose market share in that sense. I'm saying certain people will drop out of their demographic and others will come into it. You know, on the turn of the economy, when things start getting better and you have more people employed, more people having disposable income, you know, the guys that are sitting unemployed at the moment are going to come into the market, and they're not coming in at the top end of the market. They will be coming in at the bottom level of the market, but they've still got to go and they've still got to shop. And I think it's very sustainable for Mr Price. I think they've got a great business model. I mean, you can go in there and, you know, I mean, if you've got kids at school and you've got to buy sporting equipment, I mean, these are expensive things. You can pop into Mr Price Sport, kit your family out, and you've done a great job. It's not cost you the earth. I mean, I think that's fantastic. I love that. I mean, same goes for your house. Great stuff.
In terms of challenges going forward for Mr Price, I mean, you delved on that. You were talking about some heading in and others, some heading out towards a different kind of group, and others coming in as well. Because when you look at the stock, it seems that it's just blue skies. Can we say that in sort of in a comfortable space and say that it's just blue skies for Mr Price going forward?
You know, I think it's very dangerous to say that. I mean, I think, you know, complacency is a big killer in these sorts of things. I think the biggest danger that they've got and the biggest challenge that they face is they've got strong numbers. They've had great results out now. I mean, how do you top that? That's their question, is what do they do? And I mean, I think if you delve a little bit deeper into their financials, I mean, they actually say that. I mean, in the report out in the SENS announcement today, they actually came out saying, you know, look, we don't expect it to be this fantastic going forward. I think maybe
they're saying that the growth rate is going to be the same. What I did find interesting, though, they're going to reduce their dividend cover. It's currently sitting at 1.6 times, and we know very few companies offer a dividend cover below 1.5.
Yeah, you know, look, I mean, generally speaking, dividend cover below 1.5, people start worrying. Below 1, it's a problem because you're paying out of retained earnings. But I think, you know, they've got cash in the bank. They're managing to finance their growth. I don't think it's the biggest problem. I really don't think, I mean, to me, the dividend cover of 1.6, it's not a deal breaker for me, not at all.
Not a deal breaker, but clearly it is all about growth prospects going forward. Do you think the next step for Mr Price should be to delve further into the African continent? We know that they've got they're playing around in the likes of Kenya. Do you think that that should be the next move?
Well, I think, you know, growth for growth's sake, I think is silly, but if they're going for organic growth, and I mean, it's the next logical step in their business model, and it works, and I think it will work in Africa. You know, once again, I mean, I've said this numerous times on the show, you know, I worry about doing business in Africa. However, if you can get in there and you get in there right and you do it well, you can do very, very well.
Do you reckon that the Walmart scenario that could be playing out could even impact the likes of Mr Price going forward, or do you think they'll be relatively immune?
I don't think anyone will be relatively immune, because if you have a player like Walmart coming into the market and their broad scope of products that they offer, you know, it's going to make South African consumers look at things slightly differently and say, well, look, is there a better deal elsewhere? And can people bring me something more competitively? Look, Mr Price is in a very competitive space, so I think they should be okay, but they will have a side effect.
So just under 64 Rand, hot or not?
You know what? I'm hot on it. I am hot on it. At this price, I think it's a little bit high. my trading plan, I mean, I'm a trader after all, so my trading plan on this stock would be, if you look at it on the chart, have a look at the 200-day moving average. It's around, I think, 59 Rand 50, 60 Rand. I think on a pullback to there, I'd be delving in. I'd be picking some up. You know, try scale your entry into the stock. You know, you don't want to buy it at the top.
And
but
where
then
would
again,
you sell? At 80 Rand? When is good enough?
Good is good enough when you feel good about how much money you've made.
Fantastic. Okay. All right. Let's shift gears now. Paladin Capital will list wholly owned subsidiary Curro Holdings on the AltX stock exchange next month and raise more than 320 million Rand in a rights issue. These funds, of course, will be used to finance a major expansion program to build private schools around South Africa. Curro has 12 schools and plans to add 40 more over the next 9 years, an investment estimated at more than 1.2 billion Rand at current prices. So exciting, because we're going to have a new player within the education private school space, and some say you can't really go wrong if you're delving into education. Can we say this about the company?
Yeah, I would go that far. I mean, I would definitely say that. You know, people cut back on the insurance before they cut back on education, and the very interesting thing for me on Curro is, if we have a look at what they're trying to do, they're trying to offer a private school education at a sort of mid-range cost. I mean, you're not in the sort of spaces of Crawford College and, you know, that Advotech owns and that sort of space. You kind of, you know, a little bit down the line. So I mean, you can say, well, look, I'm middle income. I would love to send my kid to a private school, and now I've got an avenue to do this. I mean, I think it's a great space in the market. I mean, looking at the numbers out from them, and, you know, a couple of preliminary things I've seen, you know, they had an analysis of learners in private schools around the world. I mean, the global mean is around about 9% of learners are in private schools. In South Africa, we're at, I think I stand corrected on this, 4.1, 4.4%, there or thereabouts. You know, to me, just to get to the global mean, I mean, they can double it. I mean, that's fantastic. You can get a lot more kids into private schools. So from that aspect, I think there's a lot of scope for growth.
So you sounded very bullish on Curro. Relative to Advotech, you already hold Advotech, because it seems that you are quite optimistic about the overall education space. Yeah,
I am. Advotech, we've got Advotechs. I like Advotech. I think they're a lot more established. It's a different sort of play, and you've got to understand that whereas Curro is purely education, Advotech is slightly more diversified. I mean, they're playing the recruitment space as well, and resourcing. I mean, that's a big part of their business as well. You know, again, it comes down to Advotech's established, you know, as a divvy paying stock. Yeah. You know what I mean? For the last 2 years, even through the recession, I mean, they've had increasing divvies. So they are paying a divvy. Great management in place. It's a good company. You know, I mean, if you look at them over the last few years, I mean, the stock's done good things. I mean, down what, 2 Rand, 3 Rand, you know, a good few years ago, and I mean, we're up to around the 6 Rand mark.
So, in other words, would you be buying Curro when it lists?
You know what? I would wait. I would wait for the rights issue, and I would wait to see how the market takes it. But I think as a speculative play in the education space, I would definitely take some on my book.
For it. So hot to know.
Yeah, absolutely.
Fantastic. Okay, time for now your hot stock pick, and of course, Exxaro apparently on the cards.
Exxaro, yes, I love Exxaro. I love Exxaro. A couple of reasons. First one, from guys I chat to and other traders, you know, Exxaro's always been a stock for buying and not for selling. I mean, I've always believed this. I think it's a great company, well run. Coal, natural resource. I mean, we're going to have demand going forward. You know, and I think, you know, you look at a couple of things. You look at, you know, the sort of nuclear, let's call it a hiccup rather than a disaster in Japan, and you've got to say that guys are going to look to coal and they're going to say, well, look, this is safe, it's been working for a long time, sure, it's not the greenest thing.
And at least we know that local demand is still going to be very much intact, given the fact that we're still very much focused on coal-fired power plants, and of course bad news that we could be faced with some electricity shortages during this winter period, so clearly quite strong demand. With regards to exporting coal out of the country, is this a concern for you in terms of coal spot prices? We know that we are very disassociated with that market in a sense. Yeah,
you know, I mean, from my view on trading Exxaro, I'm not massively concerned about it. Yeah. It's not a big thing. I mean, I look at, you know, I mean, when you take a look at a stock like this or anything that you're going to get involved in, you've got to, you know, you have your own decision-making criteria. And I mean, when I come into it, I like to see the stock is looking good technically, which it is. I mean, we've held support, bounced off, still holding above a 200-day moving average. These are all good things. You know, and demand is strong. Local demand is strong. I mean, in the space that they're playing, they're a great player. I like them.
So 156 Rand, so where would you be selling at what point?
I would look to take this. I think you could go, I mean, if we're taking it as a speculative trade, probably around about the 175, 180 mark. I think it's 170 on the cards.